Pullbacks in the market in XRP are inevitable. I know this by now. You should also know this too by now. And Tom Lee says this in this CNBC interview, but that isn't the shocking announcement that he made today. In this interview, he confirmed that with the Federal Reserve finally issuing rate cuts into a re-accelerating economy, businesses will finally have the confidence again to start investing. And therefore, we will see a lot more capital quickly flood into this space, be it bonds, more so equity stocks, and equally crypto, so therefore also XRP. Better still, Tom Lee believes that cutting interest rates more aggressively wouldn't be too problematic, that the financial markets can and will still grow and not worsen inflation. Big news here, so listen very closely.
Tom Lee of Fundstrat is with us. Tom, welcome. You can comment on all those moves or anything else if you'd like, but also I want you to comment on something that hedge fund billionaire David Tepper said on Squawk Box this morning. Listen.
I don't think another ease matters, as far as being too easy. It's going to be a little bit restrictive, or even if they do two. Beyond that, it's going to be a little tricky, I think, because you got to be careful not to make things too hot to have the other side of the mountain, which was really freaking ugly, in 2000, in 2001, etc.
All right, so let's bring in Tom Lee, not the drummer. Tom, what do you make? I mean, how much does the Fed really matter to the equity markets right now?
The Fed still matters a lot because they are the most powerful institution in the world. And it matters because monetary policy relatively tight has kept the ISM below 50 for 31 months. And so corporate America has operated with a bit of caution, keeping the car in low gear because they didn't know where inflation was going to be and they didn't know where monetary policy was. So I think when the Fed begins to ease, it's not just a move in interest rates, but it's a green light for corporations to get more confident. And as you know, the ISM moving above 50 does not only revive economic activity, it probably also rejuvenates the labor market, which has been sluggish for what looks like more than 12 months.
So does that mean if the Fed stays dovish or keeps cutting that there's other newer legs to this pretty remarkable stock rally?
Yes, and I might even say that I think that we could have growth recover without inflationary pressures. I think reflexively, people the last few years think growth picking up means there's automatic inflation. That has not been the case for 25 years. But I think if companies begin to expand, plus the fact that we know AI is driving productivity gains, and that's really a big tailwind for businesses. And then we know that there's initiatives around Wall Street boosting productivity because they're going to build on the blockchain. I think there's a path for growth to be stronger next year without a pickup in inflation. That's going to be very good for profits and for equities.
Yeah, and listen, we've talked about many times, Tom, and I know you've talked about Scott and others as well. You've been long, you've been strong, you've been correct, but is there at some point, does this market take a breather? It's getting, listen, as a 401k holder, I like it, but as a TV analyst who's been doing this for almost 30 years, I'm starting to worry about it a little bit.
Yes, I mean, a pullback is going to be inevitable, but from a timing perspective, sentiment still remains staunchly negative. So, I think that the gold standard is the AAII net bulls, less bears. That's been 6 consecutive weeks where it's negative. That's never really marked a market top. I mean, that has to flip positive and sustain for several weeks. So I think if we're going to say between now and year end, could the market pull back? I'd say it's possible, but to me, it's probably from higher levels. I think there was a lot of skepticism about even yesterday's FOMC. I had a lot of clients tell us they thought the stock market would sell off because 25 was priced in. But because almost everyone told me that was the consensus view. I think people were cautious into yesterday. And that's why we're seeing the groups that should rally big, like the small caps and the cryptos and the financials and even the Mag 7.
Now, I don't know about you, but from what I heard and from what I interpreted here from Tom Lee, it almost sounded like he was saying, we are going to start rallying from here. We'll see pullbacks continuously and an inevitable pullback, but more so at a much higher level. But we're going to start rallying from here. The financial economy will eventually recover, and blockchain is going to open up a pathway with AI for growth to be stronger next year without inflation. So, the way I heard it is, we may see the end of the typical 4-year bull cycle and the start of a new cycle, a new monetary era that's going to start going up from here. And this actually is a reality that more and more people are starting to theorize. But understandably, many people are still hooked on the idea that crypto has to end after 4 years. Therefore, by December time, we'll start going down. And we may do. Tom Lee's not saying we won't, but he's saying that maybe it won't be a typical 1-year correction like we normally see, or maybe it'll be a pullback as it's inevitable. But because the economy is strengthening and growing from here, we'll see a recovery and a rally again a lot earlier than we think. So that's something to think about here. And there are many reasons for why this could be possible. For one, the 4-year cycle is actually based off macro trends. Every 4 years, macro trends go from positive to negative, hence why the market's correct. But now we are seeing for the first time since Bitcoin's inception, the trends were terrible and are starting to grow stronger and accelerate near the end of the 4th year. Also, for the first time ever, institutions are actively getting involved and building on the blockchain, building on XRP. They're waiting for regulatory frameworks before going all in and investing their trillions of dollars of capital into crypto. And this is why I believe Congress and the Fed are going to open up the floodgates for XRP. The stablecoin bill, the Genius Act, has already passed into law through the Senate and Trump's desk, which is fantastic news. Although we now are hearing some worrying news that banks are trying to rewrite the Genius bill to block American citizens from receiving their own 4% stablecoin yield and instead give it to the banks. I really pray that such an amendment is never made, as that would completely defeat the point of crypto, the original reason it was created to get away from the corrupt banking cartel. If this amendment is made, then it's pretty obvious that the leaders of this world are false leaders, and they are at the beck and call by the banks. This bill is already agreed upon in a bipartisan matter, no less, so let's just leave it as it is, the first of many bullish crypto bills to be passed into law. Speaking of which, the Clarity Act, the market structure bill, is next up, and this one will be even more bullish for XRP's adoption, creating clearer guidelines for crypto assets, for what commodities and security in XRP would be a commodity, as the Court of Law has already voted on. As it stands, Senate Banking Chair Tim Scott is pushing hard for final legislation by September 30th, so a little over a week from now. And this would be huge, and if we see that the bill will be passed the Senate, sent to Trump's desk and signed into law just before Thanksgiving, which would be very big news. With such bullish catalysts that will result in more institutional adoption coming in what would typically be the end of the 4-year cycle, the 4-year bull run, it does make you wonder if we will end up seeing an extended cycle from here on, or potentially the official end of this 4-year cycle. Let me know what you think down below in the comment section, and to find out more, stay more locked in and ahead of the game, check out the VIPwop.com/coinfactory, alpha information, educational sources, and so much more. Check it all out for free trade alerts, 7-day free trial, link down below in the description. And remember, as always, don't look short term, think long term, and I'll see you in the next one.